GM, everybody, it's Blake here. As always, none of this is financial advice. This video is designed to help you get prepared for this week's trading and give you some insights into how I'm approaching this market. So let's go ahead and get it kicked off here. We got the S&P SPY pulled up on a daily time frame. And you guys know our methodology is to get long and stay long in uptrends versus our stops. So we've had the best uptrend of this year that paid us. This was a 24-day uptrend. And on Friday, which happened to be OPEX, we closed in no trend, meaning the price closed below the 10-period moving average. So we have some levels here that are outlined. We talked about, hey, above this 393 is price strength confirmation, high odds trade for an uptrend. We moved our stop to this 410 level, which was a previous pivot low. Talked about this area in here, which was a very important level that we needed to see price get above, which likely, if it did, would see a run to this 421 level, which happens to be the 50% Fibonacci retracement from the all-time high to this previous pivotal low. And then you can see we also have this level here right around 430, which coincides with a previous pivot high, the 618 fib retracement, and also the 200-day moving average. And just for illustration purposes, you can see price did come up to this 200-day moving average. So far has failed, but I don't want to call this a complete failure yet. But so far, price is still below this 200-day moving average. So until we get back above here, I had mentioned in the last video, I'd like to see price bull flag, put a few days closing candles above the 200-day for a move higher. And if that happened, I thought it's very likely that we do at least come back to, the 450 level on SPY. So as of now, we are in stall mode on the market. So does that make me bearish? No, not necessarily, but it does make me extremely cautious moving forward for any other new long setups or new long exposure to the market. So we've had a month essentially of riding this uptrend, and now it's in stall mode. Okay, so it's very hard to press long, also very hard to short, because we still don't have rules to engage short. We're above the 50% fib. We're right at the cloud. This week could easily bounce back to these highs and maybe make another run at the 200-day moving average. And it's very likely that we could also break below this 50% fib and go into a downtrend, because if we look at some tech stocks, tech is showing relative weakness. So the NASDAQ did opened and closed inside this cloud. So we opened in no trend. I mentioned it in our Telegram group. Hey, NASDAQ is opening in no trend. Time to be cautious. And then we closed weak. So closed, near the lows for tech. So not the ideal scenario, not really what you want to see. And now also all of the major indexes, the SPY, the QQQ, the Dow, the small caps, are all trading back below their 200-day moving average. So we have to be cautious. I'm not getting extremely bearish yet, but I'm also not very bullish either. So this pattern does remind me of previous patterns that we've seen in the past. I won't pull it up, but you can go on my Twitter feed. There was a good post by my buddy Ian, did a chart pattern comparison to 2008 to the current market today, which looks very similar. So if we can't get back above, these highs and back above the 200-day moving average, well, that may not be the best price structure, okay? So I'll just leave it at that. So be very cautious this week. Lots of tech is rolling over, and that is primarily due to, in my opinion, bonds. So bonds are pricing in much higher interest rates, which, as we know, has a negative impact on the growth stocks and the tech stocks. So I mentioned last week we got to keep an eye on TLT. Talked about this 50-day, the bottom of this cloud. Then on Friday, gapped below, which obviously coincides with tech also selling off. So bonds are going to be, seems like a pain in our butt for a little while. So we're going to have to stay open-minded about bonds as well, because it does have an impact on the market. So keep a close eye on that. Let's talk a little bit about crypto. Bitcoin looks not healthy. We're extremely still far away from the 200-day moving average. 200 days all the way back at that 33,000 level. Haven't made a run at that yet in quite some time. And we're back below the 10 and 50-day moving average and back below this 22,000, which was a trigger to get long for price strike confirmation. So not exactly what you want to see if you're invested in crypto. Yeah, we're in a downtrend now, so play it safe. Like I've said many times in the past, this can go much lower. We could see 15,000 on Bitcoin, but at the same token, we could see, 30,000 very shortly as well. So it's a very volatile asset. If you have a time horizon, anything above 3 years and you're investing, which is much different than trading crypto, I think these are fine levels to accumulate. I think that, given the long term, we've seen this over and over again. Blockchain is here to stay. The technology is extremely important to our advancements as a species, in my opinion. And so I think, definitely Bitcoin and Ethereum are two crypto names that I would highly recommend that you take a look at, if you're interested in technology and waves of the future. Bitcoin and Ethereum, I don't think, are going anywhere. And Ethereum is showing relative strength. So if you're thinking of picking one right now, for me, it'd be Ethereum. And you can see, we're holding the bottom of this cloud, which is the 50-day moving average. So could this roll over and come back here? Absolutely. Could we see, sub 1,000 again? Absolutely. That's what it is when it comes to crypto. So just stay open-minded. But once again, if your time horizon is anything over 3 years, I think these are fine levels. Last thing I wanted to talk about was energy. Thanks. I almost forgot what I wanted to talk about. Energy. So XLE. All right. So we're going to get rid of some of these drawings and indicators. But XLE is showing relative strength. All right. So this was one of our focuses for the week. We had a couple energy plays, Devon Energy, Valero. Both of those did very well. And now we have XLE, which is bull flagging above the 10 and the 50, and we have a 10 across through the 50. So we've got blue cloud, which is a very positive signal for our trading methodology. So the trend is to the upside, and as well, we're above the 200-day moving average. So we came in, we held this 200-day. So it's showing relative strength. It's leading the market. Now, it's going to be tough, if the S&P and the Dow and those things go into a downtrend for energy to continue to rise up. But that doesn't mean that it can't do that, because it already did it once in the past. So keep a close eye on energy. We may have some more exposure in the investment portfolio if we see more weakness in the broader market. Might have more of a focused allocation in energy because it is showing some relative strength. So we do have some gaps above. So I do expect this to be somewhat choppy. That being said, I do think that this is probably going to lead the market if we continue to hold the uptrend, and probably going to show relative strength even in the downtrend. So that's why we're positioned in energy, showing relative strength. And, we like to put our money where it makes the most sense and where the highest odds are. So just to wrap up, this is going to be a potentially slow week. Not too much going on. This is a stall, right? So we've talked about this market stalling at the 200 and, coming into some major resistance areas. But like I said, you can't get too bearish yet because we're not in a downtrend. But you can't get really long again until we get back above these previous highs. So going to be basically a manage your types of trades this week. If we do go into a downtrend, okay, we're probably going to be taking a look at some tech names for short trades, for trades on the short side. But like I always say, that's not our bread and butter. Our bread and butter and what makes us money is getting long and staying long in these uptrends and riding the trend. So we got paid here. We had a nice payday here. We got paid here. These are uptrends. This is our methodology. So if we do go into a downtrend, yes, I will post some short setups for you aggressive traders. Me personally, prefer to wait for the next uptrend. Who knows when that will be, but I like to make my money on the long side. So that being said, I'll see you guys on the open. Take care.